Hey everybody, welcome to this free edition of our Trader User Group, a weekly roundup. This is for the trading week ending March 19, 2021. Hey everybody, I'm Preston Brent. Thanks for tuning in. This week's theme is optimism versus pessimism. I tell you this, I was watching a lot of analysts this weekend. I read a lot of different analyst reports, Morgan's and Goldman's, and it's almost 50-50 where we're going to have a strong bout of inflation, or it's, to put it in boom boom Powell's words, that would be our illustrious Fed chair, Jerome Power Ranger Boom Boom Powell. He says it's transitory. So anyway, optimism versus pessimism, take your pick. For our user group, we choose neither. We just follow price action, guys. You want to take as much of the emotion out of the markets as you can. And this is clearly a situation where we're going to have the optimists in the room and we're going to have the pessimists in the room. And let's just take a look at this past week just to see where price action's going or what it's done. And then we'll take a look at where it's going. So we'll take a look at the, for the week, for the index performance. You can see here on the index performance, everybody finished in the red for the week here. Dow, S&P, NASDAQ, Russell, all in the red. Russell bringing up the top of the heap. It's still year to date up 15.8%. Everybody's still in the green. Now, I will point out that NASDAQ, that's not the NASDAQ 100 futures, that's the composite index. The 100 futures, as I'll show you, is in the red for the year. If we look at the trailing PE ratio, or you know what, let's look at the forward PE. That's more important. For the next 12 months, 22.42, still very elevated. Dividend yield for the S&P, same as it was last week, 1.49%. 10-year Treasury, however, is up to 1.732%. So you can see the spread between the 10-year and the S&P dividend yield is a positive 24.2 basis points. Okay, so that tells us something about equity and the competition between debt and equity. As the debt instruments interest rate goes higher, it's going to start to attract more money. But at the same time, there is this off the table chart that I'll show you in a minute about bond yield, the bond market just going down big time. You can see the current VIX. It was up just a little bit for the week. It was up only 1.25%. As you can see, most of the indexes were just slightly down for the week, just under 70 basis points, 80 basis points, something like that, except for the Russell. You can see the best performing sector was in the red. The worst performing sector was in the red. Energy brought up the rear. It got literally decimated. Those yields, or the whole energy market, just crashed, right? And we look at annual sector performance. Energy is still leading the way at 30.69%. Staples bringing up the rear at 1.59%. So we're seeing a lot of this. Now, this past week, we did see the 10-year Treasury. It moved up almost 17 basis points for the week. It hit a new pandemic era high, settling in, like you see up there around 1.73%. The Fed statement and Boom Boom Powell is still very dovish monetarily. He keeps saying that inflation is transitory. For our members, Sunday evening, I'm going to show you a series of charts and I'll explain why Goldman Sachs and others believe inflation is transitory. I'll show you the reasons why. But again, these folks have known to be wrong big time. So even though we've got excessive optimism, euphoria, complacency, a speculative fervor with this 1.9 trillion, there's almost 248 billion of checks have already hit the mail that have been deposited in banks. So that goes right to the consumer. I can show you surveys where it shows a lot of the millennials are going to put that money back into the markets. So we're going to see how this thing shapes itself out. We also saw this past week, weekly jobless claims in the U.S. rose, kind of a surprise higher, up to 770,000. It's the highest level it's been in a month. We did see industrial production fall a little bit, 2.3% in February, all right? So both of these came in worse than consensus expectations. Retail sales excluding the auto segment slumped 2.7%. That's the biggest decline since April last year when it fell pretty far, right? So we are seeing some of that show its ugly head. In the meanwhile, bond traders, kind of a mixed market, although inflationary data is expanding, but not too rapidly. Interest rates are moving up a lot, but we're going to see that optimism and the group that says inflation is transitory, interest rates will steady out and come back down, versus the pessimist that says you just can't put this much liquidity into the market and have all these supply chain issues. And looking at commodity prices breaking out of a decades long downsloping trend line without expecting prices to go higher. So we're going to see one of these two win. And when they do, for our group, we'll be ready for it. If you're not in our group, I highly encourage you to come in, because we love trading all the asset classes, and we want to go where money seems to be flowing. Okay. Now, if we come over to Europe and just kind of take a look at what's going on over there, we talked about the economic data and treasuries, but if we come over and look at Europe, let's look at the data performance. You can see a little bit mixed, but a little bit better than the US. We had in the green, the Euro stocks, the 50 largest companies across Europe. The DAX also up in the green, but then two in the red, the FTSE and the CAC 40. Meanwhile, year to date, they're all in the green. China is the only one in the Asian markets that are in the red, not only weekly, but year to date. China had a bad meeting with the US and Alaska. That was kind of an abortion meeting when the US met the Chinese delegation there. Hang Seng in the green, both weekly and year to date. So that's a little bit about what I'm seeing on these markets here. We did see both Germany, France, Poland. They're taking some more steps to shut things down, seeing that they're seeing some little bit of a surge in the COVID infections. Okay. The UK government said they may have to slow the pace of the shots there, because they're having vaccine shipment delays from India. Meanwhile, the UK's policymakers voted unanimously to keep their interest rates at an all-time low, much like the Feds. You know, they're maintaining their 120 billion buying quantitative easing program here in the U.S. are maintaining the 0 to 25 basis points. In fact, I think the Fed's saying they don't see an indication of hiking the rates till 2023. Again, that was Boom Powell saying inflation being transitory. So we're going to see at what level interest rates can go to before it forces Boom Powell's hand. Now, what he will probably do, members, I'll go into a little bit more detail on this Sunday night session, but he'll do what was called Operation Twist. They did it back in 2011, 2012. We'll see how that shakes itself out. Okay. Meanwhile, over in China, their stocks fell for the week, as you can see here. The Chinese markets underperformed. They're getting some headline data on the bad U.S.-China meeting. Also, they're afraid China is going to start to rein in more of the credit in the economy, because they're just pumping money out in the economy like Japan and Europe and the U.S. is doing. So we'll see how all of this stuff shapes itself out. Okay. I want to switch the screen view here for a second. I'm going to take you over to the 4-hour chart of the S&P 500 E-mini futures. I like the 4-hour chart, as you guys know, because it gives you kind of an inside look of the daily numbers. It's a little bit more sensitive than daily, but it really gives you a good headline into what's going on. So now you can see here, we had, as I was telling our members, we had these bearish divergence crosses here, what we call a poor man's bed, multiple crosses below. Now we've got a down below the zero level. You can see this move lower here. Now these fib nodes, remember, when you draw fib nodes, if you're not used to it, the most important thing when you draw the fib node is you got to choose the right pivot points. You get the wrong pivot points and you're going to be out of sync, I can promise you, because fib nodes are only as good as the pivot points, ribbit, and only as good as the pivot points that you choose. So if you look at this, you can see that we're hovering. I wanted to hold the 3,900 level going into close. We did not. You can see Earlier in the day, we did come all the way down to about 38.76, and then we moved back up off of those a day or so ago on the on the 19th, and we came up, but we don't have the oomph here because interest rates are moving higher. You can see in this volume over price, and if I just take it out a little bit, you can see we're in this big area here of volume over price. So we're in this really wide, choppy zone now. But the MACD suggests we should move a little bit lower. The Elliott wave count suggests we're going to come up. Now, I had a target of around 4,000. We'll call it around 4,000, right? 4,008, really, but about 4,000. So if we catch wind and we take out this level here, this prior pivot high sitting around 39.22, we'll run up to these other R levels and we'll probably challenge them and move on up higher. We'll see how this thing shakes out. Now, remember, we're going to be coming into our earnings season again. It seemed like we just ended last earnings season, but in about another 3 weeks or so, we're going to be kicking off our earnings for Q1 of 2021. And we're going to see the forecasts are for this year, 2021, to come in very strong, around 170 to 175 earnings per share, all totaled in for the S&P 500. That's a big move. That's like 15% growth in earnings, just huge growth numbers. That's why a lot of the analysts believe that, the upside is going to be anywhere between 4,100 and 4,300. Assuming inflation is transitory in the near term, I think longer term, we're going to crash down, but near term, then I can see 41 to 4,300. But, that is what the charts are showing now. But if they switch, we see difference in the McClellan oscillators or the McClellan indicator that talks about breadth. If those start to switch on us, then members, I will let you guys know. We're always usually very quick to point out when markets are going to be shifting polarity here. Okay, so this is what it's showing right now in the E-mini in the 4 hour. Now I'm going to take you over to the daily, the full daily chart. I already have that set up, so I'll just switch the screen, switch you over here, and I'm going to let it paint the screen for you here. And what you're going to see is a little bit of a different view, but it is daily. I've got a couple of different things marked on the screen here. You can see the opening price for the markets sitting at 37.48. So any number above 37.48.75, we're in the green for the year. Anything below, we're in the red. You can see here the 50 EMA would be a solid support point for us at 38.41. I think that may be where we're headed. And I want to see the 50 EMA hold up. Okay, didn't do a good job here, but it only spent 1 day below before the very next day we moved back up again. We actually went into the red on the March 4th, and then we came right back on the 5th and went right back into the green again with a strong up day. Okay, and if you look back over here on the left, you can see the same thing happen. We went into the red below the 50 EMA, but the very next day we moved back up again. So if we come down here and if we do get down here and we go below the red on the 50 EMA, I'm going to want to see a green bar. If I don't, that means we're going much lower. Okay. Now, the other thing that I want to show you, we do have a bearish divergence on here. Is what we call a pure bed bearish divergence as opposed to a poor man bed. We only have 3 crosses in the MACD. So that does suggest that there is going to be some selling pressure going on here in this market. All right. Now, I want to show you the composite NASDAQ. All right. This is why it's in the green on my other chart. You can see here we're above the closing price for 2020. Not by much, but we're in the green. We're below the 50 EMA. You can see this red line here is the 50 EMA. We moved up above it, but we closed just slightly below it. I want to see us regain that. Just slightly crossing to the downside again on a daily. That would not be good if we cross back down below 0 on the MACD, all right, for NASDAQ. Now, keep in mind, NASDAQ, as I've told our members again and again, you got to do more allocation out of technology with rising interest rates, because technology stocks being, first of all, they're probably a little bit higher value than they should, high PE ratios. Those stocks like Tesla and Peloton, Zoom, those guys are going to get killed is interest rates, or if interest rates go much higher. Okay, but now this is this is a composite, and I'm going to show you the Nasdaq 100 futures, which is 100 of the largest companies in Nasdaq itself. So let me just find that one on here. Now, when you look at this one, notice we are in the red for the year. So that shows you money is coming out of the Nasdaq futures, or the 100 of the big ones. Here's the closing price for last year. You can see we're below it. So we're in the red on this one. And if we look at the customized index I have here of Microsoft, Facebook, Apple, Netflix, Google, and Amazon, you can see we are just barely holding our own. So these guys, you should use this dip, or if it goes lower, as an opportunity to pick up an Apple or a Microsoft or add to it. Okay, because I think that would be I'm not sure if the dip is over yet, but you can see here we're in the green on just these particular set of assets right now. So the FANG stocks, they're not holding up as well as the others, because as I showed you, the E-minis are just off their all-time highs. And if we look at the Russell, let me just find that one on here. I know you're on here somewhere. Here we go. If we look at the Russell, look at this one. I mean, it's just barely off the all-time highs as well, right? You can see right here, and here is the closing price of 2020. So we're well north of that, well north of the 50 EMA. So the Russell has just been leading the way up with small and mid cap, right? And I've suggested to our members we should be allocating a little bit more to Russell, small and mid cap, some of the better performers within the Russell index, right? You can see the MACD set up for a divergence, and it triggered actually on the 17th. So in the morning of the 18th, it was a trigger, and we got that big move lower. So we're not done yet on this. We can see the 50 EMA. I suspect we may have a little bit more. The momentum may carry us down a little bit more. But I still believe buyers are going to step in, right? At this point, buyers should step in. And the Dow, I look at the Dow. The Dow is also very strong. The Dow is even performing better. We made new all-time highs on Thursday of last week, and then it pulled back just a little bit. You can see the MACD. There is no divergence in the MACD. That suggests it's just going to be a light dip, and then it's going to run higher, okay? So a lot of our folks are day trading the Qs, because the Qs have just been moving up and down very strong. They're really good to do. IWM is a good one. The Dow, mostly up, is a good one to day trade, Dow futures, or just the diamonds, right? Really good ones to play with. Of course, if we come down and look at volatility, as I said, the VIX was up just a little bit. And you can see here, we just cannot get below. We actually closed right here at, I think it was 1923. And then the very next day, we moved back up again. So we had one close below 20, and then boom, or actually two, and then we moved right back up again. We just cannot seem to broach this area, all right? And now we're back up in this zone right up here again. So there is a bid that has been in the volatility markets since last March, when we had the pandemic with COVID. So we can just expect we're probably going to maintain this through the rest of this year as interest rates run its havoc on the markets, and we want to see where they go. Now, of course, if we look at treasuries, if we look at the bond market, you know, it's relatively flat, all things considered. You can see this stair step down. When bonds go down like this, you know, interest rates are going higher. Now, if you recall, especially those you watching my this weekend overview, you can see we've had members that just trade this as soon as it hits the red line, which is the 50 EMA. I'm telling them to sell the hell out of this thing. And it's just a gift. If we run back up to that 50 EMA again, which I would expect, because we're getting too far extended. When you get really extended, it's like a Bollinger Band. When you get too far extended away from the moving averages, especially the 50 and the 200, you tend to have a snapback. With the MACD, it does suggest that if we do get a snapback, it will be sold off. So if we get a gift and bonds move back up to around the 162 handle, I'm going to be all over that, wanting to sell it. Okay. Now, I was having our members do that, or just pick up puts in TLT. TLT is the same because it follows bonds. You can see we're in another support zone down here. But again, the MACD is now starting to suggest we should see some upside, just a little bit. But again, if it runs up to the 50 EMA, be ready to sell it. And then, of course, looking at currencies, the dollar, I think the dollar's got a little bit higher to go here. We did make new 2021 highs back on March 9th. I think we could run back up, make new ones, continue up, and then I'm going to be, if it gets up in this area here, I'm going to be interested in selling. We look at gold right here. Let me just, I got to do something here real quick. Hang on one second. Sorry, guys. Gold, as I told our members back over here in March 10th, I said, be a buyer of gold. It's going to run up to the trend line, bounce off, and probably come back down again. So near term, I'm long gold. But you can see this trend line. It just can't break it. And when it does, look for a retest. That retest will tell you whether you want to stay long or get out of it. Okay. Silver, a little bit more bullish than gold. Silver, if you're going to go long, I would be long silver instead of gold if you're going to hold some in your portfolio. Okay. That would be the end of that one. Discussion fairly simple. Copper, excuse me. We've been trading copper to the upside. Now it's just in a symmetrical triangle. It's probably waiting for a breakout. I think we could come down, probably test the 50 EMA trend line there, but then I just think it's going to gather support and then move back higher. All right. Now, all of this depends on the U.S. economy and the global economy, for that matter, and where China goes, because copper kind of follows China. As you guys know, I've been saying we've been long copper since early April. Some of our members made a killing on it. But these are just low-hanging fruit trades. I put out a list to our members of about 10 things you must go long in April. And we did. It was a killing. There's low-hanging fruit kind of trade, right? Much like the currencies. Energy and oil, it crashed on Thursday. Friday, a little bit of a move up. This is more of a technical rebalance. It was not a change in polarity of oil, okay? We had this, it just got too far ahead of itself. I think oil's like up 70% or some crazy number um, since the pandemic, post-pandemic. But we came right down and then technically hit the 50 EMA, and then we kind of balanced right here, and then it moved up right here. Make sure this isn't a dead cat bounce. So the next marker for oil is 64.85, which is the high point of this one candle that was made on 3/18. Until then, we're probably going to stay in this chop range. So this would be a good time now to look at, and I was telling our members over here to fade this move to the downside anyway. All right, I think I mentioned to you guys too here, you want to fade the move up, which is low hanging fruit. Okay. Now there are other trades that we're looking at, other ones that we're playing. Members, we'll go through those this weekend, tomorrow evening on our weekly market watch. Otherwise, guys, have a great weekend. Members, I will see you this Thursday or this Sunday evening for our weekly market watch. Take care, folks. Ciao now.